All right, I think we are live. I'm also just checking this on my phone to see if it comes through, but it's telling me we're live, so let's assume we are. How you going over in the US there, Brad?
It's a lot better since the last time we talked. The fires have died down a little bit. It's not smoky here, so
Yeah.
I'm in a better place.
Yeah, good. That's good.
Yeah.
Where it's a nice 20. Oh, I guess if I say 20 degrees, that might not mean much to you in Fahrenheit, but it's a nice 20 degrees sunny day over here in NZ. So yeah, all going well over here. That's cool.
Great.
I'm just looking on my phone, and I think we've got a few people starting to tune in. Apparently, we've got 46 people, so that's a good start. Great. So I wonder if we maybe just start out, maybe for those who don't know you, Brad, who've maybe only seen my channel, do you want to give yourself a quick introduction? Oh, we've got comments coming through. That's great. Sorry, Brad, go for it.
Yeah. So like you mentioned in the post, I'm a Pabrai fanboy. I've been watching his YouTube lectures for like the last 4 or 5 years now. It's amazing how I learned something new in every one of them. It's just an incredible resource for anyone who hasn't seen those. But yeah, I took the plunge into YouTube. I mean, it was really just like 6 months ago. And I was inspired by your channel to try to see if I could hit similar monetization metrics by kind of speeding up the timeline, making a video every day.
Yeah, and you've been on a massive streak.
For the most part, it's gone according to plan. Yeah.
Yeah.
But you've been doing really well as well. I mean, it seems like you've had some exponential growth in terms of your subscriber numbers and things like that.
Yeah, it's been interesting. I think I've been quite lucky because I've had 1 or 2 videos really take off, and that's helped the channel a lot, particularly to get to the first sort of 1,000 subscribers. I think when I was at 3,000, I had sort of 1,000 had come from one video, and I'd uploaded like 90 at that point. So it's crazy how that kind of stuff happens. But no, it's been really fun. Like, wouldn't have met you if I hadn't started the YouTube channel, and have met a bunch of people. So it's been really cool. And I always kind of say it's interesting how much you learn from actually talking to a camera about investing as well. It sort of solidifies a lot of ideas in your head. So yeah, it's been really cool.
Yeah, in a sense, you're looking in the mirror, telling yourself what you think you know, and pretty quickly realize there's a lot you don't know. How many collaborations have you done? I think you did one with Aussie Money. Is that right?
Yeah, done one with Aussie Money Man. Gee, I better not forget any here. I've done one with Aussie Money Man.
Put you on the spot. Sorry.
Yeah, I've done a couple with Brandon over at what used to be Aussie Wealth Creation, and he's now New Money. So I've been on their podcast, and we just did a video on Buffett's Japan investment a couple of weeks ago. And I think you're the third one. I hope I'm not forgetting anyone there. But yeah, no, it's cool to interact with other people with similar thoughts. It's interesting because I don't know what it's like in the US. I feel like stock market investing is maybe a little bit more mainstream, but value investing might still be a bit underground. But in New Zealand, like you mentioned investing, and the only thing that comes to people's mind is property, and that's about it. And property, as a result, has just gone. Prices have gone through the roof. So yeah, it's cool to be able to
safety in property, huh?
No, not at the moment. Yeah. I mean, maybe if interest rates go to -3% or something, but if they go back up, that margin of safety might disappear. So yeah. Cool. Anyhow, should we get into SRG?
Yeah, why not? Should we start by taking questions, or do you want to just kind of do an overview? What were you thinking about that?
Well, I wonder if we start with maybe some of the history, just in case there's people on that have never heard of SRG, and we'll see how it unfolds. I've got a whole bunch of notes just in case I need to pull out numbers as we're talking through this. So I think we'll see how we go. And actually, before we get started, I texted you before we jumped on this live stream to say I had snacks. And so what I did when I'd finished my prep for this live stream and had about 20 minutes, I shot off to the supermarket, and we have this tiny little international section in like a bunch of New Zealand supermarkets, and I managed to track down a cherry Coke. So they even put these little stickers on top of the US nutritional info so that it meets our standards.
Different units, huh?
Yeah, we're talking kilojoules instead of calories and that sort of thing. So I'm going to crack the cherry Coke. Oh, there it goes.
There it is. What a beautiful sound.
I don't even know if I like cherry Coke, and and then we'll get into SRG. So yeah, I guess this one came on my radar. I just looked back at some of the dates. So on the 10th of June, as far as I can see, our 13G filing came out from Mohnish Pabrai.
That's right.
Basically telling us that he'd built up a large stake in SRG. It's about a $40 million investment at the time, ballpark. A little bit hard to tell sometimes what his average cost is, but it seems to be about 40 million, which, judging by Pabrai's standards, is probably one of these sort of 5 to 10% bets he likes to make in the portfolio. So I'm assuming that's how it got on your radar as well, Brad?
That's exactly right. Yeah, I know Pabrai was in it a couple of years ago. Guy Spear has been in it. There's been a lot of people in and out of it, but I haven't really taken a hard look at it until I found out that Pabrai had taken this recent position.
Yeah, same here. I think I might have even mentioned it in some of like the 13F update videos I do that Guy Spear owns this thing called Seritage Growth Properties, but I'd never paid much attention until Pabrai just randomly bought 8% of the company or whatever it was.
Right.
So,
well, Phil Town as well. Do you have any idea how long he's had it?
A little bit hard to tell with Phil Town because his Rule 1 fund hasn't been around that long. So I think we've only got filings back till probably March this year. So I think it was in that first filing, but really hard to tell before that with whether he owned it personally or something like that. So not too sure there. But I guess some initial digging from me, I found a few other big names in there. So I found out that Buffett, not Berkshire Hathaway actually, but Buffett sort of personally owned about 5% of it. It's up to about 4% roughly of Guy Spear's portfolio at the moment, and he held it before the stock went down sort of 60 or 70% kind of earlier this year with COVID and everything like that.
And he bought some more, yeah?
Yeah, he bought some more. So I think he probably bought it in the $40 to $60 range roughly. And has bought more since it's gone down to anywhere from like 7 to 20 maybe over the past few months. So he's in there. Eddie Lampert is he's running the show in terms of being the main investor in there. And then interestingly, Berkshire Hathaway owns a lot of the debt, or all the debt really. So they've got about $1.6 billion lent to SRG, and they've got the ability to push that right up to $2 billion is my understanding. So
if they hit NOI targets, right?
Yep. Yeah, for sure. So I guess that's how it got on our radars. In terms of what the business does, so it's a real estate investment trust. It's sort of on its way to becoming one of these really established REITs that pays out, basically all of its cash flow each quarter. If you look at something like their income statement at the moment, they've got these massive negative cash flows, and it looks pretty ugly, to be frank.
It's looked ugly for a while, yeah.
Yeah, it has. But I mean, basically, the story at SRG is they initially got spun out of Sears right before they went bankrupt, or maybe a couple of years before they went bankrupt, and they've been going through this sort of transition period, which really will probably be the core of the discussion today, is can they actually get through this transition period, and what does the other end look like? Where they've basically got they initially had all of these, Sears tenants basically, and they were paying very low rents, like $4 or $5 a square foot. They've been able to offload most of those tenants. It's gone from about 70% of their sort of tenant base or of their income down to less than 5% at this point. And they've been able to push the rents up in a lot of these areas right up from $4 or $5 a square foot to $18 a square foot. So massive increases. Another part of that has been sort of redeveloping a lot of properties. So, catering it to new tenants and that sort of thing. And they've also been selling off some real estate that I guess looks less attractive for redevelopment. They don't want to be spending money on trying to develop, properties where the returns aren't going to be good, basically. So I like to see that they're not throwing money away like that as well. But that's basically the business. So did you have anything?
Yeah, I'll share a little blurb that jumped out at me today. So this is from the latest Q2 earnings release. The company intends to execute the following strategies: convert single tenant buildings into multi-tenant properties at meaningfully higher rents. You mentioned that. Maximize the value of vast land holdings through retail and mixed use densification. leverage existing and future joint venture relationships, which they have. I think it's 28 JV properties at the moment, and maintain a flexible capital structure to support value creation activities. So, yeah, really, they're just looking to densify, get more tenants with the existing space that they have. And they've been selling a lot of properties recently to, because they have these expenses that aren't going away. They have the operating expenses. They have to, well, they don't necessarily have to pay the interest on the debt right away. They're kind of kicking that can down the road a little bit. But they're spending a lot on redevelopment in the first half of 2020. So, a lot of money going out, and they've got to find a way to pay for that. So unfortunately, they've been selling properties at a pretty good clip.
Yeah, cool. And they've been, my understanding is they're selling, and we'll get into maybe some property valuation stuff shortly here, but they've been selling those properties at around a 6 cap, which is a fairly good price, as my interpretation of that. So I don't think we're maybe quite at the stage where they're selling these properties at distressed prices or any, getting super desperate or anything like that to try and generate cash, which is still a positive sign. So
yeah, it's hard to know. The average in the first 6 months of 2020. Let's see if I'm sure I've got that in front of me. So, right, they sold 13 properties in the first 6 months of 2020 for $166 million. So about $13 million per property. In the last 3 months, or I should say the second quarter of 2020, they were averaging like 11 million per property. So it's gone down a little bit. It's really hard to know if it's a trend because of what's happening in the market, or if it's just the individual properties that weren't as valuable.
Sure.
Yeah,
interesting. And we've got a couple of questions here. So maybe a bit of clarification on the Buffett thing, because we've got a few comments coming through here. So Berkshire Hathaway, Warren Buffett's sort of holding company, I guess, is not a shareholder of SRG. They own the debt. So they've provided the $1.6 billion loan, but Warren Buffett does own it personally. So outside of Berkshire Hathaway, he filed a 13G a few years ago at this point, and owns about 5% of the company personally. So just clarifying that. Cool. Okay. Where do you reckon we go to next, Brad? Do you think we dive right into some valuation stuff here, or maybe tick off some of the questions that were coming through on the community post I put up?
Well, yeah, I'd like to talk about the valuations that I discovered for the properties. I think that'll kind of set the foundation for maybe what the liquidation value of Seritage is.
Great. Yeah. So you've basically gone through, looked at every single property. If they wound up the business today and just sold everything, what do the shareholders end up with? That's basically what you've tried to figure out.
That's right. I looked at the 171 wholly owned properties.
Well done.
Looked at it was brutal. Looked at comps for each one and tried to estimate the kind of the best comp to base value on. Which is not an exact science, but when you aggregate 171 different comps like that, you come up with, I think, a pretty reasonable result.
Yep.
So I don't know if I can share my screen, Tom. If not, I can just kind of talk through it.
Yeah, not sure.
Okay. I know we don't have really any experience with this particular.
No, we don't. Just for everyone's info, we're using like a third-party software that neither of us have used before. So it's going smoothly so far. I've got a share screen button, but have you not got that option? Maybe because I'm hosting it or something.
Yeah, let me check. Share screen. I do. There you go. Okay. Let's try.
Go for it. Fingers crossed.
I suppose I want to. Do I want to share the audio? I don't know.
maybe not, because that might have me coming through, right?
Okay.
Not sure.
Let's see if this works.
Oh yeah, there we go. You've come through.
That works.
I will add you to the stream. Oh, brilliant. Cool.
Can you see my spreadsheet here?
Yeah, hopefully people can see that. I'm just going to fire up the stream on my phone and
Yeah.
see what it looks like. But
And I'll try to talk through it in a way that even if you can't see it, you'll be able to take some away. So,
great.
right, I went through and I found kind of the most comparable comp. I put the address in here, date sold, property type, all that. I started putting in the total GLA, gross leasable area, and square footage, but I petered out on that, you can see.
So we're getting some comments telling us they can see it as well, which is
great, great. So you've got the land acreage of the Seritage owned properties, and then I have the acreage for the comp. And what I did was, I adjusted the kind of current value based on price per acreage of the comp. So there's a little bit of an adjustment there. So let's go down to the bottom. We won't go through each one. So from the 171 wholly owned properties, there's 2,291 acres that are owned total. And then there's a little over 3 billion in comp value. So that's about $3.025 billion. So if you work that out on a per acre basis, it's about $17.7 million. No, that's wrong. That's per property. $1.3 million per acre is kind of the grand average. 1.3 million per acre.
Yep.
And then what I did for the JV properties, the joint venture properties, there's 28 of those. And what I did was I assumed kind of the same property value based on the wholly owned properties, which works out to $17.7 million per property. That's, this little over 3 billion divided by 171 to get the estimated value per property. So with the joint venture properties, I took that 17.7 million per property and just multiplied it by those 28 properties. Now, of course, they only own part of that. But I also assume those properties are more valuable. They tend to be in more prime locations. So, I'm assuming maybe they're twice as valuable, but Seritage only owns half. So in order to get that works out to almost 500 million for the joint venture properties.
Right, and I don't want to disrupt your train of thought here too much,
Yeah,
Brad,
no, go ahead.
you're getting a lot of compliments on this, so good work.
Oh, awesome. So if you combine those two, which is really what we're looking for, what is the total property value, both wholly owned and joint venture, you get 3,521, well, let me say it differently, $3.521 billion, okay? Mm-hmm. So to get from that to equity, mm-hmm. we need to back out that 1.6 billion in debt. We also need to back out 70 million in preferred stock. That's kind of the liquidation value of the preferred stock.
Yeah.
And that gets us to $1.85 billion to common equity. Okay. Now, if you divide that 1.85 billion by 55.9 million shares, you get about $33 per share.
Yeah.
So that's my best estimate of what the real estate is worth in a liquidation type scenario.
Yeah. Oh, we've gone into the matrix on your screen there, Brad.
Oh, wow. That is cool. I'm gonna stop sharing.
Okay, there we go. That's great. So we land on about a little over $30 a share liquidation value.
That's right. 33 is what I came up with. So if we're looking to have a 50% margin of safety, target somewhere around $16, $17 per share.
Yeah. Yeah, cool. And that's this is interesting. This is really interesting because we have, I think Phil Town said something along the lines of just the dirt's worth $17. So it's good to see that we're, or you are, I shouldn't say we, because you've done all the hard work here, that you're landing on, about double that.
And I wasn't trying to calculate just the value of the land. That was really my using retail comps.
Yeah.
So the 33 per share is based on, what do I think they could get for these existing retail properties?
Yeah.
So
Yeah. Great.
maybe the land is half that. Maybe that's a reasonable estimate for the land, and that's what Philtown essentially
Yeah.
came up with.
Yeah. I'm not too sure. I see we've got a comment from the After Dinner Investor. I'm not sure if anyone listens to the After Dinner Investor podcast, but if you don't, you should go check it out. So that sounds like he's winding up to record a podcast if he's cooking dinner at the moment. Awesome. Cool. So $33 a share. So I guess do you think that's a good point for us to maybe transition across to getting into some questions, or should we maybe touch on the NOI kind of approach to this, or anything else you
Well,
want to say further on
I
the
think
liquidation
one
value?
thing I want to say about kind of this whole trying to value the property approach
Mm-hmm.
is that, the assumption here is that worst case scenario, the company liquidates all of the properties and says, here you go, shareholders, here's what's left.
Mm-hmm.
Now, in reality, this is kind of, I think, why Pabrai got talked out of buying Sears by Charlie Munger originally.
Yeah.
Management teams aren't heavily incentivized to just liquidate and return the money to shareholders. They make a salary, they have to lay off a bunch of employees. So you really got to put yourself in kind of the position of management in order to think, okay, is this reasonable that they would liquidate? And I don't think that it necessarily is. So it's an interesting thought exercise, but the reality is probably not going to play out that way. Certainly not tomorrow. They're going to liquidate, right?
Yeah, exactly. So I think so it's worth keeping in mind that, this could basically be a long, slow death of, although the assets are worth a whole lot of money,
Right.
they could potentially be losing hundreds of millions a year in cash, and all that value just gets whittled away over a long period of time, right?
That's right.
Cool.
Yeah, let's take a few questions.
Yeah, absolutely. So let's see what we've got here. We've got a lot of comments coming through. We've got over 100 people. I think I've done maybe this my third live stream, and this is by far the most people we've had. So that's
nice.
Awesome. Yeah, I think the last one I had maybe 40 roughly was about the peak. So cool. Just looking to pull out some questions here. There are a bunch coming through. So
I notice one person wants to know which are the top 10 most valuable properties.
yes.
Trying to figure out if I should share the spreadsheet. I think I will do that. I'm going to share the spreadsheet as a link. I'll send it to you, Tom, and you can put it in the description once you publish this. So
yeah, great.
You guys can see which ones are the most valuable.
Yeah. That would be awesome. I'm struggling to find the comment here, but I think someone did ask, what's your level of conviction? How confident are you in the numbers that you've got here?
Oh, boy. I think this is really one of Pabrai's high uncertainty, low risk bets. There's so much uncertainty about how this thing is going to play out. What real estate prices are going to be 6 months, a year from now. I could totally see the economy just tanking depending on what happens with the virus, right? So I don't really think about it in that way. I'm trying to think, okay, what is the downside, rather than trying to fully understand what the upside is.
Yeah, sure. I guess to put it another way, maybe. So we've come out at about $30 a share here. Do you think it's possible that I don't know, maybe your assumptions are slightly out and it could be somewhere from 20 to 40, for example, or are you pretty confident in around that $30 number, $33 number?
No, I think with something like this, 20 to 40 is probably a reasonable kind of wiggle room.
Yep.
Because it's hard to find accurate comps, especially recent comps that have similar acreage, similar building types. A lot of these are in smaller cities, and there's just not a lot of recent sales with similar properties. So it's difficult. It's difficult to come up with something that's reasonably accurate.
Yep. And I just see a comments come through saying SRG is going to pop after this video. I think we should probably stop here and just say that this is not advice. We're not
That's a
telling you
good
to
point.
we're not telling you to buy, sell, or hold SRG here. We're just giving you our thoughts on the matter, basically. So don't take this as a stock tip, please. And if it does end up going to, you know, what Phil Town's saying, $140 in 10 years, but I think, like Brad made a video on it, it may well go to $2 in the middle somewhere. So if you are going to put your own money to work, yeah, understand the facts and all that kind of stuff. Do your own research, basically, is what I'm saying. Don't come to us saying you're down 80%.
Or if you're going to come down, if you're going to come to us when you're down 80%, come to us also when you're up, you know, 500%.
Yeah, absolutely. Cool. Okay.
Yeah.
We've got another question around, do you think there's a real estate bubble in the US? Do you think there's a reasonable chance that property prices could be cut in half? And, you know, how do we think about that?
A real estate bubble in the US. Well, certainly there's not a retail bubble at the moment. You know, there's been a bit of a dip even this year in retail real estate. You know, I don't have a great pulse on the real estate market.
Sure.
It's not really my area of expertise.
Yep.
So
that's cool. And I think it's worth maybe noting just the numbers I'm about to say are probably going to be wrong, but just to prove a point on maybe some of the leverage in here. So it's important to understand that, you know, if you're maybe thinking that, you know, we think this thing's worth $33 a share. So, you know, if property prices are cut in half, it's now $16.50 a share. That's not how the maths works out, because the all of a sudden, you know, there's a whole much more leverage in that situation. So maybe think about it like if you own a house, if you buy $1 million house and you've got 500,000 in equity and you've got a $500,000 loan, if the property price gets cut in half, the value of the home's now 500,000 and all your equity is gone and you've still got the $500,000 loan. So
it's a great example.
That's maybe just a thing to think about as well. So even if we do think there's a bit of a margin of safety in here, there's potential that, you know, if house prices do come down 50%, there's a lot of leverage built into SRG, and it could be much more than 50% on the sort of equity value of the stock. So
yeah, and you got to remember who gets paid first, right?
Yeah, absolutely. Definitely not shareholders. Shareholders get paid last, everyone. So great. Well, shall we jump into maybe some questions from the community post, do you think?
Yeah, sure. Let's do that.
Great. I'm just going to bring that up on my... Actually, I should be able to open up another tab here on my computer.
So I just want to answer one from Old School Millennial. Do I have time for that real quick?
Go for it.
It says, I think you mentioned 55 million shares as your denominator, right? For the kind of dividing the whole equity pie. I think that's total shares. I used 38 million for shares outstanding. So the 55 is also factoring in operating partnership units, because the operating partnership units can be converted 1-to-1 for common shares. So we have to include those in the whole number. Yeah, that's something that it's easy to miss, because if you go to open your Robinhood app and you calculate the number of shares outstanding by taking the market cap divided by the share price, it's going to give you 38 million. But if you go to Morningstar, it's actually going to factor in these operating partnership units. So you got to be careful the quality of information you're using.
Yep. Great. And I might actually just share my screen here as well, because there's one thing I think we should talk through possibly before we jump into questions. This idea has been sparked from looking at a question actually, but basically someone's asked, you know, I think it was in 2017, Pabrai said he thinks the SRG could be worth something like, the equity could be worth something like 12 billion in 10 years time. So in 2027, sort of from the time he said it. And how do we land on that number? You know, is the maths easier, or how do we get there?
That's easy for me. I was thinking about that today. Can I take that, Tom?
Yeah, go for it. Yeah.
So, right, the value that we came up with, or I came up with by running comps, was about 3.5 billion. Okay. If I were to pull comps for multifamily, it would be about 4 times that for the same acreage. So,
Okay.
I mean, that keeps it really simple. If you're going from retail, kind of single story retail, to multi-story multifamily, you're potentially going to 4 or 5x your values.
Yep. Yeah, cool. Awesome. The other way I was going to look at it is, rather than on a liquidation value, you look at the net operating income of the real estate. So thinking about it like how you would buy a rental property. So if you want to get a 6% cap rate, so after getting your income in from rent, paying some basic expenses, how much you're left with relative to the price of the property. So the other way to look at that is if you use some of those numbers from Pabrai, basically working through all his debt assumptions and everything like that. Pabrai at the time was talking about an implied net operating income of about $1 billion. So basically you need to try and figure out, how real is that $1 billion? What's the, what's the roadmap look like for SRG to get there? And what is the, what do rents have to go to? What sort of square footage do they still have to have within the business? And I've done some really basic numbers just to give you some rough figures, because depending on whether you use some of the assumptions Phil Town said or some of the things that Mohnish Pabrai has said in the past, you land anywhere from, I think, like $600 million to $1 billion in net operating income. And yeah, just some real basic figures. So currently, I think SRG has around 30 million square feet. They're able to rent out all the redeveloped properties for about $18 a square foot. If you grow that rent out into the future at some sort of 3 or 4% a year type figure, inflation plus a little bit maybe, you can probably realistically land on about $25 a square foot for some of that fully developed real estate. And depending on the square footage assumption that you have kind of left over in 10 years, you could go anywhere. I'm getting anywhere from 500 million to about 800 million in NOIs, depending on the rent per square foot that I use and the actual square footage as well. So those are pretty rough numbers, but I think it's entirely possible that they get to that point. Basically, is what I'm trying to say.
Another thing that gets lost in these price per square foot calculations is, when you're converting these single story retail into multifamily that are multi-story, you're multiplying the square footage.
Yeah, absolutely. Yeah.
So that changes the numbers a lot potentially.
Yeah, for sure. So they could be selling off a lot of square footage, but they could be adding back just as much, or maybe a little bit less, maybe a little bit more. We don't quite know, but yeah, it can go both ways here. Great. I'm going to have a go at sharing my screen.
Yeah, those were some pretty good questions you got in your community post there.
Yeah, we have some smart people asking hard questions in there. Is that all coming through?
I can see it now, yeah.
Great. So I'm going to order this by newest. So whoever was the first one there will get the first question.
I like it.
Cool. Rightio. So what do you think the intrinsic value of SRG with 15% margin of safety? So we've sort of covered our thoughts on valuation. If you use some of either Mohnish Pabrai or Phil Town's sort of NOI and 10 years type numbers, I mean, Phil Town's talking $140 a share potentially in 10 years' time. So if you were to use Phil Town's framework, which is basically what he wants, 15% a year compounded over a 10-year period. So if we use the rule of 72, which hopefully everyone knows by now, that means a double every 5 years if you're growing at 15%. So over 10 years, you get 2 doubles. So if he thinks it's worth $140 in 10 years, we cut that in half twice. So we 140 over 2 is 70, cut that in half again is 35. And he tries to buy with a 50% margin of safety, which is 1750, which is actually basically exactly what you landed on as well from your liquidation value stuff, Brad. So that's the way we are thinking about that. Brad, did you maybe want to take the one about when do you think SRG might start paying a dividend again? Any thoughts there?
That's so hard.
How long's a piece of string? Yeah.
It's so hard because there's so much uncertainty about how long it's going to take for these cash flows to come online. What the trajectory of the net operating income is going to be.
Yep.
Largely because of the situation we find ourselves in with the economy. So I know they mentioned that they would not be paying a dividend for the rest of 2020 unless they had to keep the REIT status. Yeah, that's really all I can say about that one.
Okay, no, that's cool. But they do, so they have a preferred stock as well. So they do have to keep paying, I think, a 7% dividend on whatever the price was when that was issued at the time. So they are still paying out some dividend money to preferred shares because that's the way it works. But whether the common equity will get a dividend anytime soon is it's a question we don't know.
I wouldn't hold your breath about it.
Yeah, for sure. Okay, absolute worst case scenario. I think we've probably already covered that a little bit. Basically, that's going to be the slow death situation. So, they've got negative cash flows for an extended period of time and they continue to sell properties and never just liquidate the thing very quickly. So I think that's basically worst case scenario. So it'll be a long, slow death. And if you are invested in the company, then your money is likely to be locked up for a long period of time as that happens, which is not a good situation. But that's in my mind what the worst case scenario looks like. I don't think SRG goes to zero overnight personally, but you might have different thoughts on that, Brad. I'm not sure.
Say that again, whether SRG goes to zero overnight?
Yeah, I don't see that happening personally unless they have, massive vacancies, which is sort of what happened earlier in the year, but they seem to get through that.
I mean, it's nice to see they're trending positively towards the rent collection, right? I think it dipped down into like the 50 or 60% back in April or May, and now it's in the 70%, I think, for July. So that's great to see.
Great. So Family Dinner One had the same question, and I think they replied to that first comment saying, "Don't worry about my question, just answer this, guys." So we'll skip that one. All right, curious to see whether you value it on a net asset value / liquidation or use a DCF. Yeah, so we've already covered that. I don't think this is the kind of company where you use a discounted cash flow. I think it's either net operating income or liquidation value, basically, just because it's real estate.
Right. Yep.
You largely agree with that, Brad?
Yeah, there's too much uncertainty to be able to do it based on a discounted cash flow evaluation, in my opinion. Yep.
Great. If the stock market would have closed for 10 years, would you sleep at night or wake up worried about Seritage getting your money
I love that
out?
question.
Yeah, no, that's a great question because I think you should probably be going into something, or you should be going into pretty much anything with the mindset that you could hold this for 10 years if you had to. Seritage, I think, like we've said a few times, there's so many possible outcomes that I personally probably wouldn't be comfortable holding on to it for 10 years. Yeah, it's a maybe for me, actually, because we've potentially got a large margin of safety from the price because it's, by your numbers, Brad, below liquidation value. But the long, slow death is something that would keep me awake at night.
Yeah.
What do you reckon?
I would really like to see what the progress is after 3, 4, 5 years. So
Yeah.
I wouldn't be crazy about not being able to look at it for 10 years. Probably would let it pass if that were the situation. But fortunately, I think the stock market will be open in 3 years with any luck. Yeah, fingers crossed.
Yeah. Okay, let's see. So Dive the World, I think this is a mutual subscriber of ours, Brad.
Yeah, absolutely.
Have you learned any more about the court case between SRG and Sears? Yeah, that's a hard one. So I guess a bit of background maybe for those that don't know. Basically, there's a lawsuit going on at the moment around around when Seritage was first spun out of Sears, and essentially what the lawsuit is trying to achieve is trying to claw back SRG into the Sears entity, basically. For me, I'm no lawyer or bankruptcy expert or anything, so I've read a few write-ups, but it's really not an area of expertise at all for me.
Sure. Yeah, I did a little thought exercise on this that I'll share. I'm also not a lawyer, and I haven't read through the all that stuff.
Yeah.
But there's an interesting discussion about this in the most recent Value Investors Club treatise of Seritage. And so the question is, was the spinoff of SRG a fraudulent transfer, right? Were the Sears, the owners of Sears ripped off? And so the exercise I did when the properties were valued in the spinoff for Seritage, there were two independent appraisals that were prepared by nationally recognized firms, Cushman and Wakefield and Hilco. And what they came up with was that the wholly owned properties were worth about $2.3 billion. And the JV properties were worth about $400 million. So that gives a total property value of $2.7 billion. Okay.
Yeah.
If you look at the enterprise value today for Seritage, it's at $2.2 billion. So based on what the market is valuing Seritage today, one could argue that the Sears owners actually got a reasonable deal at $2.7 billion.
Yeah.
So, that's what I came up with by just doing a little thought exercise today.
Yeah, interesting.
But I have no idea, how that's going to unfold. I posted the question because it intrigued me in Corner of Berkshire and Fairfax, which if any of you aren't members to Corner and Berkshire of Fairfax, highly recommended. It's like 30 Canadian dollars for a lifetime membership. There's really smart people in there. But they seem to think there was a very small, almost negligible probability that Seritage would get clawed back to Sears. So, that's kind of what I'm going on. And I assume Pabrai, being a former holder of both Sears and Seritage, would be well familiar with the issue. I think he even said he thought by late 2019 there would be no more legal risk of SRG being clawed back. And so my sense is that that's probably why he pulled the trigger in 2020, because he decided, okay, that's no longer relevant here. But I don't know. I haven't talked to him. He doesn't return my phone calls, much like you, Tom.
Yeah, exactly.
We both tried to reach out to Pabrai, but he seems to be a busy man.
Yeah, actually, just this little side tangent here. I'm conscious of time, so I won't talk about this for too long. But sure. I've had I had a bit of an epiphany a couple of months ago, and I thought a great idea for the channel, and feel free to join if you're interested, Brad. A great idea for the channel would be to do Mohnish Movember. So at the end of October, I would trim my beard completely, try and replicate the Mohnish moustache as well as possible through November. And I thought it'd be a cool idea to maybe do like a video a week, progress, so people can get moustache updates, and I can do some sort of Mohnish Pabrai, lesson that I've learned over the years. What do you reckon about that?
I think it's a great idea. And we've got to learn how to play blackjack too.
Yeah.
I think that's going to be important. Yeah.
Yep, for sure.
I think I'm terrible at growing out mustaches, so you may fare better with that than I would. But I can always paste something on that might work too.
That works. Just add a little bit more like marker each week, so it's a bit thicker.
There you go.
Yeah. Cool. Okay, let's get back to SRG. So Dive the World had a couple more questions. So what have we got here? So basically, do you trust Eddie Lampert is the next one. Eddie Lampert is a hard guy to find interviews and that sort of thing on. I've found. Have you managed to track much down on him?
No, I've been meaning to do kind of a scuttlebutt method on Eddie Lampert.
Yeah.
But I haven't gotten around to that yet. I've been swimming in these property valuations. But that is at the top. One of the top items on my list is to really try to understand Eddie Lampert better, what his history is, what motivates him, what kind of guy he is. Yeah, I don't know much about him. Seems pretty private.
Yeah, absolutely.
Yeah.
We've got a couple of yeses for Mohnish Movember in the comments.
Yeah, I see that. That's wonderful.
Great. Okay, and will you buy more at 11? Maybe.
I bought a decent amount at 10, so I'm not eager to buy more at 11.
Fair enough. Yeah. I have a laughable sized position in SRG.
I've seen that.
Yeah, okay, there you go. So yeah, I have literally like $1,000 investment in SRG at the moment. But frankly, after seeing this, after seeing your work on this, Brad, because for everyone watching, this is the first time I've seen. I knew you're working on this, Brad, but this is the first time I've seen all the numbers. So that may change. But
this isn't financial advice, by the way, Tom, for you either.
Absolutely, no worries there at all. Cool. Okay, so next question, David Kane. So this will be interesting to see where you end up. I'm about 250 million short of Pabrai's last opinion on the 2030 expected free cash flow. It's crazy how many people can see the same financials and have so much discrepancy between forecasted income. So that probably goes back to both of our comments a little bit earlier. So I get anywhere from 500 million to 800 million, whereas Pabrai I think was landing about $1 billion. But again, if the square footage goes up with, adding floors like Brad was talking about, that could well change. So I think this question probably confirms the theme of this stream, which is basically there's a lot of uncertainty, but potentially, the price is low enough for it to not matter. Like, worst case, or maybe not worst case scenario, but not the perfect outcome in terms of the actual operations of the business, could still produce good investment returns, which is really what we're after.
Right.
What's your opinion on the drop from 15 to 12.36 in the past 2 days? I don't know about you, Brad, but I basically don't pay attention to anything, any short-term stuff like that.
Yeah, normally I don't. I looked into it a little bit. I use a website called Open Insider to see, what's happened recently with insider transactions.
Yeah, good point.
Someone mentioned in the comments, Brian Dickman, the CFO and executive vice president, sold 10,000 shares on September 14th. So just 10 days ago.
Yep.
That was 28% of his holdings.
Yes, so, I was looking at that as well, actually. Yep.
Yeah.
Sorry, go for it.
So, it's hard to glean. It's hard to glean too much when an insider sells. I mean, there's so many reasons that someone needs to raise cash, right? They need more cash for a variety of reasons. The stronger signal, the much stronger signal to me, is when an insider is buying. There aren't that many reasons for an insider to be buying. So while it's not great that the CFO is selling, I'm not putting too much weight on it. And he could be selling more. Maybe that is why the price is going down, but that's all speculative.
Yeah, I agree completely. There's only one reason people buy stocks generally, and
that's right.
There's many reasons that they sell them. And I've just brought up Open Insider, which if anyone doesn't use Open Insider, it's just openinsider.com. You can search any stock or any US stock, I think, as far as I know, and see all the inside transactions. So I'm looking through SRG at the moment, and there's very little activity over the past couple of years. There was something going on with Eddie Lampert, but basically he bought and sold. It looks like
he exercised some options. I think that's what that was.
Yeah. So nothing. I mean, that's the most recent transaction we've had for quite some time, actually. The one from the CFO. So interesting to look at, definitely, though.
Yeah.
So Brad, were you going to say something there?
One thing was interesting, Phil Town also bought Armada Hoffler not too long ago, and there is quite a bit of insider activity if you check that out on Open Insider.
Right.
I've been meaning to dig into that company, but after going through this exercise of valuing all of Seritage's properties, I'm not super crazy about doing the same thing with Armada. Hopefully they own fewer properties to make that a little bit easier. But
yeah, fair enough.
so the $30 subscription, that's corner of Berkshire and Fairfax. It's a message board. That's fantastic.
Yeah, it's really good. I actually just joined up to that probably about a month ago, so highly recommended. There's some very smart people in there.
Yeah.
Okay, I'm just conscious of time. I think we were going to try and aim for an hour, so I've only got about 10 minutes left, but if people are still engaged, maybe we'll keep going. I see we've still got 120 people in here, which we must be making some sort of sense here. or at least you are, because you've done most of the work on this, to be honest. Okay, so whatever and however we come up with the valuation, what would you consider the degree of speculation in this equity? Yeah, okay, that's an interesting question. So the way I think about buying into pretty much any investment is that the risk is in the price that you pay. So the higher the price that you pay, the higher you set the bar in terms of how much cash that business has to return to you, is sort of the way I look at it. So although we've talked about there being a lot of uncertainty, I think you can minimize your downside risk a lot just by the price you pay, essentially. So I don't know if that entirely answers the question, but do you have any other thoughts on that, Brad?
Yeah, if I were to say I think Seritage is worth X today,
Yes,
there would be a high degree of speculation in that. I totally resonate with what you're saying about, what do I feel? What's a price I feel pretty safe about, where I have asymmetric upside to downside, and that's where I kind of value the properties and go from there. So that's how I approach that.
Yeah, I mean, if you took an extreme example and said, looked at something like Apple at the moment, and well, that's probably not the best example. Let's say you looked at some sort of steel company and the earnings are all over the place. You don't really know whether they're gonna lose money next year or make money the next year. Yeah, like you say, putting a valuation on them that's suggests that they're going to earn a lot of money is potentially speculative. But if you can buy the whole business for like $5, then there's not a whole lot of risk there if it's a big steel company. So it's entirely about the price you pay.
It's like Graphtec's pick, right? For Pabrai, what he saw is, okay, based on these contracts that are locked in, we're going to earn our money back in 5 years.
Yep,
that's great.
Yeah, course, absolutely.
There were issues there with what's happening now, but yeah, that's a great way to look at it.
Yeah, and year 6 and 7 and 8 are completely unknown, but if you get your money out by year 5, then it doesn't matter. Absolutely. Cool. What is their moat? So yeah, interesting question. So I think the way I think about this is the moat in real estate, I think, is all to do with location, personally. So if you're in an area where, like, a lot of SRG properties are in an area where people have high incomes, there's a lot of demand for property, I think that's a competitive advantage in a lot of ways. If there's not a whole lot of room to build new buildings in a densely populated area, that's potentially a competitive advantage to own that real estate. But it's not like, I don't look at SRG as having some crazy competitive advantage because they're called Seritage growth properties, just like Coca-Cola can put their brand on a soft drink and sell it for more than Jim's Cola or whatever. I don't think that's the type of moat we're looking at with the SRG, but they own a lot of very well located property, is my understanding.
Yeah, I definitely don't think they have any kind of branding moat, but yeah, they have control of prime real estate, right? They own it. That's a moat. It's not like someone else can come and say, "Oh, actually, this is my property." No, that they own the property, so that's the moat.
Yeah, for sure. Will we be recording the live stream? I will do my best. I think it's recording on YouTube,
we hope.
So we should be, yeah, we hope that's working. Okay, how did Pabrai come to valuations north of 12 billion? So I think yeah, we've already touched on that with some of the maths we brought up earlier. Yeah, here's a good one. So, would you be interested? Would either of you be tempted to take profits along the way, and at what price would you consider selling in full? So, yeah, this is interesting, Brad, because we've talked a lot about downside protection, but if everything goes well and in a year's time, SRG is at $80 a share, what's your game plan?
Oh, selling is so much harder than buying.
Yes.
So my plan right now for Seritage is I'm going to wait until Pabrai does something. Then I get out of my own way in terms of making emotional decisions.
That's a great plan, actually. Yeah. Yeah, selling's so much harder. We talked about it with insiders just then, that there's so many reasons for selling, and with investors there's a lot of different reasons for selling. It could be to do with the business, or it could be completely unrelated to SRG. Maybe we have found one of these magical PE of ones that Pabrai talks about all the time, and we've got no cash anywhere, so we need to sell something less attractive. So it depends a lot. Like for me, I think if that scenario played out and I had no other opportunities and I was already, had a decent chunk of the portfolio on cash, I think I'm holding on and seeing how it goes, assuming that everything's still on track. But there's a lot of factors there. Someone actually just asked, how's the cherry Coke? It's probably a 4 out of 10 for me. Yeah, I'm gonna be harsh.
I guess Coke won't be sponsoring these in the future, huh?
No, well, yeah, sorry, Warren. We've maybe that's, I don't know. I feel like cherry's not much of a popular flavor on anything in New Zealand. Is cherry Coke just everywhere in the US?
I think so. I don't drink Coke, so
yeah,
I don't know.
Fair enough.
Yeah.
Yeah, I don't usually either, but I thought it'd be fitting for the live stream. I couldn't get my hands on any Sears candy though. That's a bit harder to track down.
That's a bummer. That is a total bummer.
Okay, so we'll try and crank through these last questions. So, yep, we'll try to share the recording. We've already talked about the Sears lawsuit. Luis, tough questions. Yes. Okay, last couple. So, I think, Scott, with your question, we've already talked quite a bit about the debt, so we probably don't have too much more to add there. This is an interesting one. So, regarding a longer term perspective, what are your thoughts on the retail apocalypse? Is it going to continue, or are more owners going to find new solutions? In my opinion, the valuation of more stocks will be heavily dependent on that.
Yeah, I've been thinking about this. The nice thing about Seritage's position is that they seem to have some optionality in terms of what they develop this real estate into. Now, there's always a possibility that, because the zoning is retail, they're not going to get approved to put a multifamily structure there. So there's risk in that. But yeah, I definitely see them moving away from retail in a lot of cases. So hopefully they're able to do that in a timely way with the zoning and all that stuff.
Yeah, absolutely. And I think that was the last question we had. Were there any in the chat here, Brad, that you wanted to pick out? I'm not sure if you've been looking through that at all.
I've been glancing. Whew, there's a lot. Let's see.
Do either of you plan on going to a Pabrai meeting, or actually plan on going to a Pabrai annual meeting one day? That would be amazing. I'd love to. I've also considered going to the meeting in Omaha and getting up first thing in the morning and standing in line with Mohnish.
I've done that.
Pretty cool.
Yeah, we should do that.
Really?
I have done that.
So you've actually met him, have you?
Unfortunately, I couldn't find Pabrai.
Oh, no good.
It was a total bummer.
Maybe he slept in.
Yeah, it was a couple of years ago too. I wasn't super geeked out on Pabrai yet.
Yeah.
So I was just kind of casually glancing for him. But definitely, if I go again, I will find him. Yeah. Don't be frightened, Pabrai, if you're watching this.
Yeah. I'd love to go to Omaha, but man, I think
it's a bit of a trek for you.
Well, New Zealand's far from everywhere. Even going to Australia is, a 3 or 4 hour flight for us. And yeah, I've looked it up before, because I forget where you'd have to fly to. There might be a few different options to get to. Well, there will be to get to Omaha, but it's like 2 days probably of traveling to get there.
Yeah.
It's just insanity. So I would love to, and I should probably do it before Warren and Charlie get too much older. But that's it's a long way away.
Yeah. Well, I'll answer one here. SC writes, what could change that would cause you to sell outside of cloning? So, the beautiful thing about owning a business, even if it's $1,000, right, Tom, is once you own a piece, you're much more interested in learning about it. So you listen to the earnings calls, you get to know it over time. So, hopefully I understand the business. I know the business well enough in 3, 4, 5 years that I'll be able to make, the kind of an investment decision on my own rather than cloning Pabrai. Because you're right, he could be selling because maybe it's hit his estimate of intrinsic value and he's got this other potential 10 bagger. He's like, okay, we're out of this. We're moving over to that opportunity cost, right?
Yep.
So yeah, there's other reasons, but at this point, that's the easiest way for me to think about it, is to just wait till I get the green light from someone much smarter than me.
We've got another question here, and actually, that's basically the exact reason I made this small investment, was to make sure it doesn't fall off my radar, and just to continue to understand the business. Because to answer Jason after dinner investors question, which has just disappeared on me, what's holding me back? Why haven't I invested in this? Better alternatives or something bothering you about SRG? Basically, the answer to that question is I hadn't done the work like Brad's done. So Brad's been my, as Pabrai would say, unpaid analyst here, and I need to take him to lunch if this works out. Frankly, that's what's been holding me back. I'm looking at a couple of other companies at the moment. One looks really cheap, but it's got a lot of hair on it, and this is the one that I sent to you the other day, Brad. And I actually did send it to Jason as well after Dinner Investor. You're the two people I sent it to. So that's the other thing I'm looking at. But I've got a fairly chunky cash position at the moment, by my standards at least. I'm not like Buffett with his billions there or anything. But if I had 2 or 3 things come up, I could probably make all 3 a good chunk of the portfolio if I wanted to. So it's not really looking at anything else being the issue. It's just trying to get a good handle on SRG. I think I've got a reasonable handle on the upside with the sort of NOI approach, but understanding the downside and some of the different variables that I need to get my head around is really what's held me back there.
Yeah. I just want to answer John here. Have you guys found the earnings calls? I have not. I don't actually know if there have been earnings calls. Are you aware of that, Tom?
Yeah, I don't think there are earnings calls as far as I know.
Which is really
earnings calls.
Yeah,
it's frustrating. Earnings calls definitely aren't compulsory. It's I guess like Berkshire Hathaway doesn't have an earnings call, and they're one of the biggest companies in the world. They have their annual meeting, which definitely answers lots of questions over and above the business as well. But yeah, as far as I know, they don't have earnings calls. All right, shall we maybe? Are there any last questions you wanna?
If you have a last question about Seritage, pop it in the chat.
Yeah, and Jason should let us know what he's had for dinner before he records the podcast as well. Jason has the greatest podcast outro I've ever heard. So he's called the After Dinner Investor, has dinner, invests in the evening, and his sign out is it's time for dessert. It's great. What's the site you guys were talking about? I think we talked about a few, but Open Insider was one. So that's where you can see insider transactions.
There's
and
also the corner of Berkshire and Fairfax.
Yeah, corner of Berkshire and Fairfax. And I think Value Investors Club may have got a mention in there somewhere as well.
And it's funny, people always ask me, Prem, what is the last name? That's the question you have to answer in order to get in. So.
Oh, really?
Yeah.
Come on, guys, you should know that by now.
That's right, you should know.
Yeah, if you don't know that, you can't get in. But if you know how to use Google, you could figure it out as well. I'd say.
That's right.
It's not a particularly common first name. It's not like Googling what's Tom's last name. So you should be able to track that down. Great. Cool. I think that's looking like probably a good place to wrap it up there, Brad.
Cool.
I appreciate
Cool.
very much all the work you've put into this.
Yeah, it was fun. I hope we
look,
can do this again soon.
Yeah, absolutely. And I will do my best to try and track down where the recording of this is gone. I think usually it shows up on YouTube somewhere. It often takes quite a long time to process. So if you guys don't see a replay for a day or something, that's normal, I think. So
And
I'll
if you
try.
guys have questions that didn't get answered in this, just leave them in the comments. I'm sure Tom and I will both be engaging in the comments under this one.
Yeah,
So
yeah, absolutely. And yeah, definitely go check out Brad's channel if you haven't before. It's Brad Kellner Stock Compounder, spelt
that's right.
exactly like you've got it, like Brad's got it up on the screen there.
Yeah.
So go check out Brad. Is there anywhere else they could or should be following you, or just YouTube?
Just YouTube. LinkedIn, if you want, you can find me on LinkedIn. Happy to connect there. Yeah, I think that's about it. I haven't gotten my TikTok brand launched yet, Tom, like you have.
Yeah, I got on I don't know what I was thinking one day there, but I'd made my first TikTok and I haven't made another one since. I think I've got 10 followers or something. So go be number 11 if you want someone.
There you go.
Cool. No, I appreciate that, Brad. It must be getting what's the time over there for you now?
It's not terrible. It's 8:36 my time.
Cool. No worries. Well, I better leave
but I'm gonna
you
have
to
dessert. Yeah, I'm gonna go have dessert.
Yeah, absolutely. And I see After Dinner Investor has had steak and he's drinking the tears of Sears shareholders. That's great.
Whoa! How do
That's
they
amazing.
taste? Yeah.
Yeah, probably not great.
That's
cool. Thank you very much, Brad. And I appreciate everyone for tuning in. It's been really fun. And somehow we've still got 130 people here, which is phenomenal.
Awesome.
So thank you, everyone. We will definitely have to do this again in future because it looks like it's been pretty well received. So thank you, Brad. I will talk to you again in the not too distant future, I'm sure.
Sounds good, Tom. See you soon.
Cool.